Welcome everyone to another episode of Financhill. Today is October 28th, and we're going to try a new thing here, new format. I have Adam here on my right or left. My camera's flipped, I think. Adam, quick introduction for the folks at home who don't know who you are.
What's up? I've been in Bitcoin for 9 years now. Started a Bitcoin ATM company in 2013, took it public in 2021. That's Bitcoin Well, and still am the CEO and pretty the head first in the Bitcoin.
Awesome. Yeah, good time to be in that. Hey, it's been a really nice and steady last 3 months, right?
Yeah, we're actually. I had a word. We're like I'm writing all the press releases and stuff because we have Q3 coming out here in a little bit, and I put the word. My quote in the Q3 press release is, "This is a tumultuous bear market." All right, tumultuous crypto bear market like that. I have the word tumultuous in there, which I was quite proud of.
Nice. So today we are covering a bunch of really cool news. We got Core Scientific, which funnily enough, Adam and I, huge Bitcoin people, had almost never heard of this company. One of the largest Bitcoin miners ever. They control, or they had about 4.9% of the entire hash rate of Bitcoin.
Crazy.
And yeah, they're going under. We got a bunch of really interesting quickie news. Elon Musk, of course, taking over Twitter. Stuff about crazy inflation rates in Argentina. And then something interesting I wanted to talk about is the two, well, there were a couple tech stocks that had earnings, but the two I wanted to focus on this episode was Meta, obviously. They have just gotten pummeled lately. And then Amazon as well. They were down 20% at one point yesterday. They kind of bounced back a bit today. But there's some interesting stuff in there that I think we can learn about the state of the economy moving forward, the cyclicality of everything, so-called, and some interesting stuff that's kind of resulted from that. One thing being that the odds of the Fed doing a 75 basis point hike in November have actually dropped. And I think there's a big correlation between that and some of these earnings that have come out recently in the US. So yeah, first things first, let's talk about, sorry, bear with me. I'm trying to work this whole new stream setup here. Core Scientific. So Core Scientific, public company. It was a big miner, much like Riot and Mara. They just made an announcement that they will not be making any debt payments in October and November, which is kind of a precursor sign that, yeah, we're running out of money. We're not going to try and raise any more money. We're probably exploring bankruptcy or alternatives to their capital structure. And this is a really big deal, I think, just because it kind of came out of nowhere. I know that there have been a couple people that have said, this is one of the miners with a lot of debt on their balance sheet. And, ultimately, these are operations companies. There's not really much IP. They either have the cash flow to run these miners or they don't. But yeah, they are, I think, just because of the relative lack of volatility with Bitcoin, the profitability being very hard now with without having energy under, I think, 7 cents a kilowatt hour. It's basically a loss to mine Bitcoin. And so they're going under. And I think the question that a lot of people have is like, is this the first of many? Is Mara, Riot, or any of these other ones next? And the other question too is like, who is continuing to bolster up the hash rate, which is making mining extremely unprofitable for all these major corporations? Adam, we talked about this on one of the streams before, but what are some of your thoughts on this?
Man, yeah, who's continuing to bolster the hash rate? I mean, I think you had a pretty hot take about that a few weeks ago.
Yeah.
But I think that ultimately, like, I think we're watching fiat principles inside a Bitcoin world at this point. Fiat principles being like, get as much debt as possible, really like stack up that balance sheet, get some assets, and don't think much more than 6 months down the road with like a crazy high time preference. And you're getting destroyed. Like mining, like a miner that does, or a miner that's based in Bitcoin standard or with Bitcoin principles probably grows a lot slower, probably has less mining equipment, but can just shut the miners off. Like that's it, right? Just turn the miners off. You're not going bankrupt. But you are just, if it's not profitable to mine Bitcoin, if you haven't negotiated a proper energy contract, if you haven't put the miners in the right location, you just turn them off. And so I think that Core is the first of many of the miners that who are operating in like kind of a fiat standard mindset. Even Bitcoin company as a whole, like, are we going to see Coinbase? Are we going to see crypto.com? Like there is some serious fiat going on in the crypto kind of, you know, large corporate cultures. And I think that Core is just first the tip of the iceberg, so to speak, because there's no lag. Like retail businesses like crypto.com, like Coinbase, they kind of have that lag between market and financials. But like with the hash rate spikes, it's 14 days, right? You're getting a difficulty adjustment every 14 days. Like no lag there. It's like, boom, it's adjusted. And I think that that's why we're seeing such a quick fall down of this specific business.
Well, you've been doing this for so long. Like, not only have you been into Bitcoin, but you've run a Bitcoin centric business through, I think, 2 or 3 cycles.
Yeah.
So I think probably by this cycle, you had some understanding that, like, just in case, I have to be prepared to have some cash on the balance sheet to get through, a low volume year. You don't have to deal with mining in your business, but I mean, what would you say to like Bitcoin companies? It's baffling to me, the lack of foresight that we could get to a stage where mining is extremely unprofitable, or that we could get to a stage where volumes are so low and have all these businesses not be able to handle that, only like 3 or 4 months into that bear cycle. How do you prepare for something like that, I guess, is like running a company?
Miners just aren't mining companies, they're energy companies. Like the miner that figures out they have to innovate and invest in cheap or free electricity is the one that wins. The same way Tesla is not an automaker, they are a technology company. They're a data company. The same way Facebook is a data company rather than a communications company. You just have to realize that like they are an energy company. They are not a mining company. Their product happens to be mining, but they got to focus first and foremost, I think, on sustainable and like cheap ways to produce and consume energy.
I think one of the things that I thought was really interesting too, I was reading one of the reports, is that Celsius had their own mining business and they were hosting all of their machines and operations with Core Scientific. And even though Celsius bankruptcy process for about 3 or 4 months, Core continues to run their machines, right? And they're probably doing it at a loss as well. And they're saying like, well, maybe we'll shut them down. They're trying to get actually, they're trying to front run, other creditors in the Celsius bankruptcy case right now, which is pretty fascinating. But I think that just goes to show you, some of the lack of leadership in that company.
Well, both companies really. If like, I mean, I guess there's not much leadership to be talked about in Celsius anymore. But yeah, man, 100%. It seems like a bit of a scramble over there, and probably it is a scramble. But you're right. Like, I mean, it's a great strategy, right? We're just not going to make our debt payments. That's like that's a pretty good way to save money, I guess. But I think at the end of the day, it's indicative of exactly what you're saying. And to your point, like, not much leadership going on. I mean, this is the problem, I think, with businesses that are kind of like all segregation and just make the wrong bet. Like if we're talking like, keep in mind, they basically bet on Bitcoin going up right away, or they bet on a higher Bitcoin price than what could have been. If we're looking at 80, 90, $100,000 Bitcoin right now, they look like absolute heroes, right? Mm-hmm. They look like absolute dynamite. Their balance sheet probably is looking better than it ever has. Like it's a simple switch. And so maybe they wanted to be the biggest, maybe they wanted to be the best, and they had to make that bet. Obviously it was the wrong bet, and that sucks. But I mean, there's lots of CEOs that make wrong bets, right? Like you think, I mean, we'll talk about Zuck later on today, but like, is that the right bet or the wrong bet, right? And this one, like I said, because they're in an industry, like the Bitcoin industry just like thrives on low time preference. If you are a low time preference CEO, if you're a low time preference business owner working in Bitcoin with like Bitcoin philosophy and Bitcoin principles, you're going to thrive. You're not going to be maybe as sexy as you could be in the bull market, but you won't be like a dirty friggin' ogre in the bear markets. And like, that's just time preference. That's how time preference works.
I think one of the things too, and I don't know, what your stance is on macro and interest rates, but it seems that we're moving into a paradigm where rates aren't going to be at zero for long stretches of time anymore. And all these companies, like they fueled their rapid expansion through the ability to borrow fiat really, really cheaply. Now, as that seems to kind of be shifting a little bit to, I don't know, maybe something crazy happens and we get, zero rates once again. But I think more likely we're probably going to be in this higher floor bound of rates. And these companies that financed all this stuff, they're going to have their debt roll over to a new paradigm. And I wonder how many more are going to roll over like core,
Yeah. Oh man, it's going to be interesting. I mean, like the
Debt is
cool
just
thing
death
is
for these companies.
it will be if it's not structured properly, it's not term. If it's not like if it's in volatile cash flow producing assets, like you think debt on an apartment building is probably still fine. Like you're not going to be as profitable, and I don't know if your vacancy rate increases, like but like that's probably fine. But like again, your biggest worry when you're a miner is not your debt payment, it's your energy payment, and it sounds like they haven't sorted that out. Like
No.
they're energy companies first and foremost. And if you were like, I don't know how you burn, if you've got free power or some kind of power revenue share. Like we have an investment in a company that's mining with S9s, so like by far not the most efficient miner, but they do it on a revenue share with power generation through flare gas. So they go to oil producers and they offer them a rev share on their flare gas. So during the bull market, they're not even close to as blow off top as maybe they could be. But right now, they're just sitting there doing their thing. It's a rev share. So it's like their payments are a little smaller. They have no debt because like they have a bunch of S9s that they bought during the last bear market. Like it's just that's that time preference philosophy that I'm talking about. I think that it's going to extend even further than just this Bitcoin crypto industry. Like we're going to see a lot of tech companies. Well, we're seeing it right now. Like I was listening to the Tech Meme Ride Home podcast last night, and I think they noted that like I think of all the companies or all the tech companies that went public in 2021, something like 95% are trading below their IPO, which is like, and that's like ourselves included. Like that's a wild metric. Either 95% of management teams are incompetent, which like, because I'm in that stat, I would hope that's not the case, or the market is just like freaked out. And based on like a number of different factors, probably interest rates and other things, it's going to be a really fascinating like Q4. And then I think even Q1 too, like into next summer, we're still going to be talking about this, I think.
I mean, what I wonder whenever people bring up stats like that, and I actually have like a similar one this show, all these stocks trading under their IPO price, is that a function of bad management or is that a function of mispricing the IPO? Because I think that's a big factor, is so many of these IPOs launched like these very opportune times on the wave of like all this buzz and momentum. And it's just like they were trading like Rivian was a really good example of this. That was trading at an insane multiple on IPO, and nobody, thought there was any value in that. I remember Jim Cramer was saying, we're a buyer of Coinbase at like $400 a share. Right off the back of like their craziest quarter ever, as if that was
which also like means he bought into the dumping of like their CFO sold 100% of his shares on IPO.
Yeah.
Like what did you think was going to happen?
Yeah. Yeah.
So yeah, man,
be a normal buyer.
I mean, I don't think it's not really management. I think it is market for the most part. Like what you're saying, like it's bad pricing at IPO, or maybe what's the word, opportunistic pricing at IPO. But also I think it's just like there's not a lot of logic sitting in the market right now.
Mm-hmm.
There are more than ever in history companies trading under their NAV, under even in some cases the cash on hand.
Yeah.
It's just people are like evacuating risk assets. And obviously Bitcoin is still lumped into there, although less than I expected it to be honest. And also like tech stocks are just like, that's the second most liquid thing you can get rid of, short of like other than cryptocurrency at this point, is tech stocks. And so you sell up that loss, you take, especially right now, like we're going to see a friggin' bloodbath here in November, man, when it's tax loss season. Like these big hedge funds, they're going to be taking their losses right where they need it, right when they need it. And it's going to just further suppress the market. Like we are not in for a pleasant Q4, I don't think.
No. Yeah, that's the term I've heard, the shooting of the generals. They finally seem to have come for the big tech stocks. This is funny. I'll pull this up real quick. Where was it? This is Amazon. Now, to be fair, it has bounced back, but on the initial reaction to earnings,
Woo!
20% drop, Amazon. And
Dude,
like,
that's
what is
a
that in perspective? This is like a $1.2 trillion company. So you're talking about, you know, what, $200 billion like in
that's a
seconds.
Solana type red candle, man. That's
Yeah.
that's not even a Bitcoin candle. That's a Solana candle.
Yeah. Yeah. And crypto's still too volatile. Gary Gensler wants you to know that,
Very
crypto's still the
dangerous.
Wild West, but
Yeah.
Amazon after hours is not.
Yeah. Yeah, man. It's shocking. I mean, Amazon's going through tough times. I heard a hit piece on them talking about how they're like the narrative around Amazon, right or wrong, is that they are not able to retain staff, and they have like how many hundreds of thousands, million of employees. It costs them something like $9 billion a year
Oh, wow.
in recruitment. So of the 33 billion they make like in profit per year, like that, like, they, if they had zero recruitment costs, they would have like 42 billion of profit, which is like,
Damn.
it's quite heavy. However, like, so you can see how that catches up to them. And this is what I mean about time preference. But like you'd assume that the data crunchers that are Amazon, which is like again, they're a data company, not a commerce company. They're a data company. You'd think somebody did the math to be like, look, we're spending 9 billion right now, but we're 50% more efficient if we crank through people this way. And like, you just have to assume that like eventually that catches up to them. They've long passed that debt. I mean, look, it's like what is, they've been public for 20 years or something like that. Like or maybe not quite 20. They've been around for 20 years. Like, I guess the point that I'm getting at is their time preference was too short. And they didn't develop the proper systems. They don't have the proper processes. And so they're burning through people, and the market's punishing that. I don't think this is due to the $9 billion recruitment cost, but I do think, or retention cost, but I do think it's got something to do with the fact that people are worried about like retail spending and probably that new CEO's ability to manage such a behemoth. Also, they've been getting the shit kicked out of them on Thursday Night Football. Like, the Amazon Prime games suck, including my Cardinals last week, who snuck out a win. But it's been brutal for Amazon Prime. They paid $1 billion and they didn't get a touchdown in Thursday Night Football until week 3, which is pretty crazy.
Damn. Yeah, a lot of spend on the content too. The Lord of the Rings show, I've heard too, that was a lot.
Yeah, I heard it's not even that great. My sister-in-law's boyfriend was telling me it's like he's like a purist, and he's like, this is trash. He like almost doesn't even want to watch it, which is kind of interesting.
Yeah, so many fantasy shows these days, like the House of Dragon, Lord of the Rings, The Witcher. There's like always, it's a renaissance, I guess, if you're like a fantasy junkie.
Yeah, I'm not really. I'm digging the like the crime, like the true crime.
Yeah,
I don't know, wave. I've been on that. It's been pretty good.
You were talking about headcount and recruitment and all that, and that got me thinking. This has been this weird thing with this whole economic drawdown, or whatever you want to call it, rapid inflation, all that. The number that the politicians who want to paint a rosy picture use is the unemployment rate. The unemployment rate's fine. Everyone still has a job, right? And you start looking at some of these tech earnings, and what you start seeing is that the thing that people are getting upset about, the analysts, is like, why does Facebook have such a big headcount? Twitter, Elon's going in there scrapping 75% of the staff. But I don't think he's just scrapping them, because he disagrees. He just realizes it's also a bloated organization.
Yeah.
I don't know if you've seen or other people have seen these TikToks of like the guys or the girls who go into work and they say like, this is a day in the life working at Meta.
Dude, yeah, software sales. I saw guys like software sales, and he's like, they get their cold brew. They walk into this massive, gorgeous, like
cold brew. They have wine, beer. They're getting their
catered
meals.
lunch.
They have like
big
a full
buffet.
cafeteria, comp meals. Crazy
Well,
stuff.
And you and I were talking about this the other day. Like, it's a result of the free money. Like, at the end of the day, it all comes back to the free money of, again, on the Tech Meme podcast, like, they were talking about VCs would write like $1 or $2 million worth of deals a year. Now that's like a daily. He was talking in the context of VC partners needing ghostwriters for their Twitter because it's so much more competitive now. And so these VCs are getting more and more competitive. They're having to write larger and larger checks, which means companies are taking on larger and larger checks for less and less equity, which already we're seeing the inflation kind of start to happen. We're seeing this reduction of money usefulness or of money value. And then what do? Like, you just have to waste it, right? Because it's like the best explanation of a budget that I've ever heard is from The Office, where Oscar is explaining it to Kevin. And he says, if your mom and dad give you $10 to run a lemonade stand and you only spend $9, the next year you're only getting $9, right? Next year you're getting whatever you spent this year. And so you're like disincentivized to not waste. And then you just create this culture of waste. And then it becomes like recruiting is tough, and Amazon spends $9 billion. And so you have to expect, like, okay, so now what do we got to do? We got to have cold brew. We got to have meals. We got to have fancy jump parks. We got to have, ping pong tournaments and like these crazy excess. That has nothing to do with the mission. We do recaps every month here. And like we've put a pretty serious, I was caught in that trap too, right? Just in the recruitment trap. And I said, like, look, like spending is now reduced to like mission centric spending. And even some of that, even like the threshold at the rate that we spend money is done within, like, is it mission centric? Like, how does the mission fail if we don't spend this? Or how does the mission succeed if we do? And if it's not an apparent answer, it's like, it's tough to sign that check.
Yeah, it has to go. I have some quickie stories, and then we'll jump into meta earnings, because I think we probably both have some opinions on that, the whole metaverse thing. Also, how that business in general is going. They blame some of their slowdown on TikTok and whatnot. Quickie news. Maybe this one's not so quick, but officially this week, Elon Musk takes over Twitter. CEO Parag Agrawal is out. CFO is out. The content, the content head is out. Elon Musk is fully in charge. He actually put out a tweet. Let me find this.
Chief Twit.
Yeah, she's out. He put out a tweet 2 hours ago saying Twitter will be forming a content moderation council with widely diverse viewpoints. No major content decisions or account reinstatements will happen before that council convenes.
Like, wow, go figure. Decentralization cures some of the bias in a room. Like, who would have thought this was the case?
Yeah, who would have thought? Let's actually get diverse viewpoints.
Wow.
The thing is, like, a lot of these companies LARP in doing this diverse viewpoint thing, but it's not. It's just like everyone is still, like, I don't know. I read this statistic that, like, of these major tech companies, they did internal polling, and it was like 90% of the workers at Google identify as Democratic voters, right?
Wow.
Maybe that's just a symptom of like being a San Francisco company as well.
Yep.
But like, come on, you're gonna tell me that you support diverse viewpoints? This is nonsense.
Oh yeah, man. And to think, like, even if it's not the CEO's intent, like we have a small team. We've been as big as 80, but like, and even 80 on the grand scheme is like not that big. And like, even decisions that are getting made, like that are like outside of my purview, with an 80-person organization is crazy. How about, like, what does Twitter have? 400,000 or 4,000 people? Like there's legitimately 4,000 people working. Like Parag or Jack, like, they don't know their names. Like, there's no way they're involved in those decisions. And like, you think about how telephone works, peanut butter jelly sandwich turns into like, I want to go ride on the train. It's the same way with philosophy, and you get people with ego, and it's challenging. So I think good on them. Like, make the council, make it decentralized, and then put that council as the final say. Like, great. That's how it should be.
So I think at some point, Elon Musk, I don't know if he wrote it. I've just heard it mentioned. He wants to create this super app called X, right?
Yeah.
And it's kind of this idea of mixing maybe, lifestyle components, but also free speech. What do you think of that? What would you add into an app like that, a super app?
Well, and so correct me if I'm wrong, but Jack just released, or not Jack, I guess, but he kind of founded this team that went on to build this AT protocol, which is like, I think he's calling it Web 5, cheeky blockhead that he is. And I would suspect that like this super app X will be kind of hosted or posted over and above or over on top of this kind of AT protocol. And I think it'd be cool. Frankly, I've not been in, like, my head is so hardcore into Bitcoin. I'm going to keep talking here. I have no idea if anyone's going to hear me, by the way.
No,
Julian,
it's still on my camera.
Okay, cool. You're here. Okay. I don't know if there you're back. I don't know like what I would do necessarily. I know that what I wish I had from social media platforms is certainly more like visibility into algorithms. Like I know Elon has said, which of course opens up more gamification, but that's just the free market. Like if the rules are made simple, then the rules are there and they're followed and they're enforced like autonomously and properly. Then great. Those that can get around the rules are just the smarter bunch, and that'll make the rules stronger, or will identify weak spots in the rule, which is great. I think that transparency is the biggest threat to my enjoyment on social media platforms. And so I don't know how you do it, but in this kind of like super app, it would be that. And then also something I'm running into, which is kind of solved a little bit right now, but could probably be better, is like my wife's kind of like, so I'm getting impersonated on Instagram like weekly. Every week there's a new Adam O'Brien, it's Adam O'Brien _ Adam O'Brien, whatever. And what they're doing is they're ripping all of my pictures, which include photos of my kids and stuff, posting it on their profile, and then messaging people like, hey, how's your crypto trade? How's your whatever? My wife's kind of getting freaked out. She's like, hey, like, you know, like we had a son 8 months ago, and I have like his picture, and then like all new parents do, it's like, you know, his full name and his birth weight and his date of birth and all this stuff. And my wife's like, hey, like all of his personal info's just getting like ripped off, harvested, and then distributed at a mass level right now. And like I have a tiny Instagram following, so like for me it's just close friends. But like better controls around like fake accounts and around authentic images. Like show me, is this a screenshot? Show me, is this edited? Show me, you know, is this an authentic photo taken by the account owner, or is it ripped from somewhere? Like I think
it seems extremely easy to code something that can identify clone accounts. Like it's crazy that Instagram doesn't have that.
You'd think so, man. I mean, they're disincentivized though, right? Because what do they track? Daily active users, and spam accounts are active users. So like they're, and this is that fiat mindset. This is that time preference mindset. They're not incentivized by revenue. They're not incentivized by authenticity. They're not incentivized by good user experience to an extent. I know they are in certain cases, but like they're incentivized by what the market wants to see. And up until very, very recently, it was just growth at all costs. And growth at all costs includes spam and bots and fakes and clones and ripoffs.
Yeah, it's going to be nice now that, you know, it's kind of under his control. It's a private company. They don't have to report, you know, earnings and all this stuff. They don't have to chase all the growth metrics that they've been stuck with forever.
But
he'll be able to focus on doing more low time preference things, right?
Potentially, but he's got some foreign investment. Like I know that he's got CZ in there, which you'd think CZ's got some pretty, like CZ's time preference is pretty good.
Yeah.
I don't know who else he got in there. Probably some Saudi money from his. The fact that he didn't tweet funding secured when the deal closed, I think he missed a huge opportunity there.
Yeah.
He should have been tweeting funding secured. But all in all, I can't imagine they're going to like eliminate the growth metrics and stuff, because I think those investors are going to want their cash back. They grossly overpaid for the platform. But I do think that there is going to be some lower time preference. And frankly, I don't think Parag had a time preference. I think Parag was just like a friggin' fairy that floated around in space and kind of was more of the woke police than
there was just no vision or mission at Twitter. I think that was just apparent. Like it's been a failure since they went public. Essentially the stock's been flat since they went public, right? Yeah,
Jack lost interest as soon as he lost control of the company, and it's been a tumbling snowball ever since. But it's crazy because it's like it's a tumbling snowball with this crazy user base that they can't monetize. Like them and Snapchat, they haven't figured out how to make money with their media platforms. I
actually have no idea how TikTok makes money. I don't know how TikTok's not in the same boat as Snapchat. I know it's not public, but like I go on TikTok and like if you see an ad, you just swipe it. Like it's just, I don't know.
Yeah, that's a good question actually. I wonder, have you seen Gas? I think it's called
Gas. No,
it's this new kind of up and coming app, predominantly in schools, like in high schools. And you create your circle or whatever, and then there's anonymous polls, and you vote on like who's the biggest jock, and you can vote who's the best looking, who's the tallest, whatever. I don't know what kids think is cool these days. And you can then pay a subscription to either have your name get blocked from the things, or to have your vote be anonymous at certain ranks or whatever.
Oh,
And like
that's interesting. Yeah.
that makes sense to me. Like
Well, one
makes,
of the things I thought for Twitter is like they should just charge people to be verified. Like if you make it that far, you're significant enough to probably have some dough. And if you want to have that, you know, that status and whatnot, like, you know, pay for your blue check. I don't see a problem in that. Have
yeah,
different types of checks too, maybe, but
there, yeah, like, and it would give the verification process a lot more weight. Like if that's a
yeah,
revenue generator, then it would be a lot better. So you
yeah,
would, yeah, I think you'd think
you
that,
would be more inclined to also interact with the system as well, right? Because you're maintaining a status on that platform. I think it is like all these platforms that have, you know, verification, like you're given this sort of status, but you should have to pay something to maintain it, I think.
dude, and
Right?
like give me an API,
Yeah.
like why there's not, like, the limitation on Twitter is a feature, not a bug. But why can't a tweet be sent out that gets sent to like an AI service and have 1,000-word blog article written like around the thesis of that, like in consultation with myself or whatever? Like these types of add-on services are just so apparent in so many
Yeah.
different ways. They're a short form content company. They founded the short form content kind of craze that we're in right now, and they did it without video, obviously, and their video platform sucks. But I don't think they've capitalized on what short form content is a loss leader into the long form content, and I think that they didn't realize that, and haven't gone ahead with anything cool.
Yeah. Yeah, they have a great in with the crypto community as well, and I think there's probably some stuff. I know they're trying to introduce like wallets and stuff, but there's so much like, you know, they could be hosting, you're right, like long form content on there. Let people live stream. Like I can't get my live stream on. They had like a media studio thing, but it's closed access. Anyways, I'll leave with one note on this, and I thought this was interesting. I saw a friend of mine post this. It's called Gall's Law, and basically it is a complex system that works is invariably found to have evolved from a simple system that worked. A complex system designed from scratch never works and cannot be patched up to make it work. You have to start over with a working, simple system. And it kind of brings me back to the days of, you know, like I'm not that old, but I'm old enough to remember when we all used forums to communicate before we
Right.
had Twitter and Facebook and all that. You'd have anonymous forum posts, you know, bitcointalk.org. And back in the day, like really like short tangent, I used to host a piracy site so that you could download movies on your PSP, because back then, you know, your devices couldn't just play any video file. It had to be very specifically formatted in like, you know, 480 by 272 resolution. I still remember that. And so these little communities would form around just like sharing movies and like TV shows and images. People would go out of their way to manually encode stuff in the right format, and people would talk and request things. And you know, it goes back to the days of like AOL chat rooms, and like all these things were very simple systems. They didn't have censorship. They didn't have, you know, content moderation policies besides just like you reporting if somebody was posting downright illegal stuff. And I think they kind of worked. I know that there's cases of people being bullied on these platforms and whatnot, but they kind of worked. And, you know,
Well,
I
my
think,
man, there's cases of people being
yeah,
bullied in the schoolyard too. We're not banning playgrounds. Like
yeah, exactly.
that's a human condition.
Mhm.
That's not a platform condition.
Yeah, yeah. And I think it's tough because I do think that in some sense, some of these platforms are not being held accountable for some of the crap that's been going on them. You know, I think YouTube is one of them where like there's so many scams uploaded daily, and it's pretty crazy that they can't be held liable for not doing anything
Well, but
about it.
hang on. Like take that thought a step further. Like
Hmm.
the number one form of scam is phone calls. So is my phone carrier liable because they let a scam onto their network? Like how far does that analogy
Yeah,
go?
I don't know.
Like
I would say so. No, I
like
mean, like if
what about my internet
well,
provider?
that's an open protocol though, right?
No, it's
Like
not. Bell
having
Media
a phone
or
number.
Bell telephones are a closed system,
Okay.
right? Sorry, like anyone can access the phone system, but they need a carrier to do so.
Well, is that necessarily true? Because you can spoof phone numbers, and I've done that before. You can go through a site, you can call in, and then the receiver of the phone call can get a completely random number that you make up.
Right, but they're still using a phone carrier to do that. Like someone has given them
Yeah.
access to the MVNO network.
Okay.
So like that, like the phone system is hyper centralized
Hmm.
to my knowledge and understanding. But I mean, like just kind of like take that analogy further than just YouTube. Like it's an interesting kind of mental exercise to see who's responsible. Is Apple responsible for letting them appear on your screen? Is Samsung responsible because it's using your TV? Like how far does this go?
Yeah, I would just say, like, there's repeated, you could just argue repeated negligence though, like with these scams when they're using, very clearly like fake URLs and stuff. It's like it's
Mm.
very easy to patch in. Users report this stuff, but the problem is like, the automation service is not coded to I guess cancel these things immediately. Like if 10 people report something as a scam, there should be something that can go over a series of check marks and just wipe it out, right? Like decentralized or centralized, that could work to some
Yeah,
extent.
theoretically. I mean, you do run into like censorship at any level, and even at the decentralized level, I think opens up the opportunity for malfeasance. And like,
That's
if
true. Yeah,
if
you can use it
if
as a
you and
tool to
I
shut
are
someone up too.
against
Yeah.
Coinbase, and you and I have followings, we can just go get people to report the Coinbase movie, which is totally legit. Then is that good, right? Like we're running into the same problem. Censorship is problematic. I'm not saying it's not good. I'm not saying it shouldn't be thought about, but I'm saying it's like it's a slippery slope when we start talking about how do we get rid of stuff.
Well, I think the solution, and like this is the one in the Bitcoin community, is kind of like what Adam Back was proposing with Hashcash, is make spam prohibitively expensive to kind of permeate
Right.
through things, right? By attaching some sort of like real world cost to it. But yeah, like right now, there's no real world cost to, post on a Twitter, like, why isn't anyone talking about this? And then like link it to some like BS MetaMask wallet scam or whatever. But yeah, I don't know.
Yeah, and that is
It's
challenging.
it's
I
it's a
think,
challenge that they'll have to figure out at Twitter, I think, because I think, they can have their centralized system that plucks spam, but eventually I think they should impose some sort of cost to naturally get rid of it as well. So they're
well, but
not, I guess, over bulking their content moderation team.
I think we're ignoring the people that are like, this is an education problem, not a content problem. Like if we teach kids from a young age, don't go into a car with strangers. Like
Mhm.
we educate these kids. Strangers are potentially dangerous. Take your precautions and move on. And don't get me wrong, it is in no way a child's fault if they get taken, but we do a lot of preventative measures in order to prevent that from happening. We should
Yeah.
be starting education against scams like in the same way. And we should have this, like, there's no one
I
educating.
totally agree with you on that. Yeah, like these platforms should be, educating their users on this.
Well, should the platforms, or should it be like parents? Should it be part of the curriculum? Like what the hell do you learn in school that's more important than protecting your money against scams? Like algebra?
Yeah.
you learn about like social studies. You learn about like the even World War II is less important than we should be learning about World War II and the implications of that, but we should be learning about how do we protect ourselves in 2022. Like the curriculum has to be flipped, and we have to be educating. There
There
has
needs
to
to
be a
be like a
standard of
common
education.
sense course taught in schools.
There's one called Calm in Alberta, anyways. One called Calm. You can elect to take it once over 2 weeks in your entire high school career, and you're good. That's it.
What is it? Like how to do your
Like,
taxes or what?
yeah, not even. It's like make a budget, put on a condom, uh, and maybe you manage a portfolio. I can't. I took it like literally. I took it in 2 weeks over the course of like from July 3rd to July 17th, when I was 15. So like,
Damn.
I have no idea. I remember we watched a lot of movies, and that's all I remember.
Yeah. Well, that stuff has room for improvement for sure.
Oh yeah, man. But again, like I would really challenge this is the platform's problem, and really make it like this is a societal problem. Like
Yeah.
even crossing the road. If I see a kid, like I coach hockey. There's 18 6-year-olds that I hang out with like twice a week at hockey practice. And we learn hockey, but we learn about like discipline, and we learn about crossing the street, and about how to tie skates, and like we learn more than just like how to skate and shoot a puck. And like there's got to be more people and programs that exist that are like emphasizing this this is important in the real world kind of skills.
Mm-hmm. I think the reason I say the platform should take responsibility for this too is because you don't just have, what you're saying is good advice for new generations, but most of the people that got taken by these scams are really old, right? And so how is
Yeah,
the
that's
information
true.
getting to them if they're not going to go out, their minds and the way they interact with the internet they're not going to go out of their way to like learn about this stuff because they don't know how to use that internet as a tool like that, right?
Yeah. I
Now,
mean,
if you're
yeah.
40, if you're under 40 or 50, like you Google everything, but there's certain people like I have arguments, with older people sometimes, and it's just like I could just Google and we don't have to have this argument because this is not like subjectivity. There's just like a fact here, right?
Yeah.
But
Exactly.
all right, moving on. Quickie news. That was a little while, but it was good. Leg. 74% of institutions plan to buy crypto.
Whoa.
I don't know about you, but when I see these headlines about crypto, I always just say, okay, most crypto is still Bitcoin. So when people say I plan to buy crypto, like at least 60% of
Dude,
that is Bitcoin.
I don't know,
hopefully.
man. There is so much. What's the opposite of FUD? Is it FOMO? Is
Yeah,
FOMO
FOMO would be
the
the opposite of FUD.
official
Yeah.
opposite of FUD now? Can we just agree on that maybe?
Yeah.
There is so much FOMO around like crypto, and like I saw this narrative of like a faster horse kind of philosophy. People
Yeah.
aren't seeing Bitcoin as like that. Like people are lumping Bitcoin into high risk investments, but it's like clumped in on the low side of the high risk investment, which means people are seeing not like high return investment, once again, because of time preference. Like I cannot emphasize enough how important time preference is when running an institution or a business.
Yeah.
Also, like based on this headline, like I can't see it there, but I wonder, like, was it like 8 people or eight institutions that were surveyed? Like
1,052.
Oh, okay. So that's actually kind of meaningful. But yeah, like I do think it is people looking at crypto. Like I know someone who's like, hey, I heard the XRP or the Ripple trial is going well. Like, should I be buying XRP? And I was like, well, why do you want XRP? And they're like, well, every bank will use it if the SEC lawsuit goes well. And I was like, no. I was like, if the SEC, if Ripple Labs, centralized organization ran by one guy with or ran by multiple people, but like with one guy and one vision, if that lawsuit goes well, then they have to go take their protocol and convince the banks to all work together to accept that protocol and use XRP. And only if any of that happens, and there's an increased demand at the retail market level for XRP, will XRP have been a good bet? So like, are you interested in that? Like there's a lot of things that have to happen, but people don't think that way. They're just like, oh, Ripple, XRP, XRP must buy. And I think
you've seen the meme, and it's like the best performers are sometimes like they're not the mid IQ, they're like low IQ and then high IQ. Like here's my time preference. I've thought about this. I've done 1,000 hours, and here's like, ooh, buy dog coin because market go up and everyone has stimulus, right? And sometimes those bets work. So who knows? Maybe the institutions, if they do their low IQ allocation and some of this stuff, it might pay off. But ultimately, I think the thing that people are forgetting is the scarcity element of Bitcoin has just not been successfully recreated with these other cryptocurrencies. They're all
not even
false.
tried.
It's not even, I mean, yeah, like they're trying to do proof of stake. Look at the issuance of ETH, it's so low. It's just like, yeah, but like the protocol, like a big part of scarcity is the hardness and the durability, right? Like scarcity, I can't believe something is scarce unless I understand the durability of it as well.
Right. Yeah, like scarcity is not about number of coins in existence today. It's about who has control to issue coins in the future. Like at one point, the dollar was awesome, right? Backed by gold, super, super scarce. It's all good. And then you get like the same dollar gets the ability to be manipulated in the future. And that same problem exists with literally every single cryptocurrency except Bitcoin and like ironically Dogecoin.
It's really hard for people to understand that because what they look at is they say, well, it's only 13 years, right? Or 14 years. Which is like, how do we know if it's going to be so durable, this deep into the future? And the thing that you have to understand, I think, as like an investor in Bitcoin is go out and talk to Bitcoiners. Like this is not negotiable. The protocol for this is not changing.
It's not 13 years. Like the advent of code dominating rules has been around for 40 years. I mean, we're using it right now, right? Like email, HTTP, HTTPS. Like we've been using this protocol layer for rules for 4 decades now. That's what drives the Bitcoin scarcity, not the white paper that was actually 13 years, 363 days ago was the white paper released. Almost 14 years ago.
That? Oh, right.
Halloween.
Halloween. Oh, that's
Halloween,
awesome.
2008, my man.
Happy white paperversary coming up.
Almost. It's the like Eve. The white. This is white paper Eve.
Nice.
Yeah, Monday is the big day.
All right. Speaking of lack of scarcity, I stumbled upon this this week. This is Buenos Aires, guy coming out,
Gross.
have a nice fancy dinner with his friends. 110% inflation in Argentina right now. This is how he paid for his bill. The highest denomination in Argentina is 1,000 pesos. And because they have such a volatile currency, there's like the blue market rate, which is what the government exchanges will pay you, versus the black market rate, which if you want to get any sizable amount of US dollars, you got to go to the black market. That 1,000 peso bill there, the largest denomination that they have, is only worth about $3.60
Is the
right
black
now in
market higher or
Argentina.
lower?
Hmm?
Is the black market lower?
It's worse. You get fewer
Worse.
US dollars in the black market.
Yeah, so you get they have a liquidity problem.
Yeah.
Dude, this is back to Ireland in the 13 or 1400s when the workers would go out to drink on their Fridays. They would order all of their beer at the beginning of the night because beer got more expensive as the night went on.
They'd pay the tab first. Yeah.
They'd have to pay the tab first. They would prepay for 10 beers or whatever their drinking allowance. Irishmen, probably like 25 beers. They would pay for their beers up front because inflation and hyperinflation was so rampant and so brutal. And this is the same thing. That's ridiculous. Who's carrying around like stacks of money? Like come on. How is that even in your pocket? Like you need a backpack to carry around a dinner's worth of cash? Give me a break.
I want to do a deep dive into this at one point because like very similar to, because Venezuela has this as well. Venezuela is like a little bit deeper in it, but very similar to Venezuela, Argentina was once one of the most important, fastest growing economies in the world. Right. And one of the things that's resulted from this, because their hyperinflation has just really ramped up in the last few years, is their population growth has basically fallen off a cliff. It's actually been declining for the last 7 years. And so there's a real correlation between the ramp up in inflation and the growth of the population. People are either leaving the country, they're not having kids because they cannot plan for their future when the basis that they denominate their life in, is fading away at 100% a year. Right.
Oh man, yeah, that's so tragic. That's just absolute robbery, right? It's so disheartening to see people literally losing life savings because of malice. And like the crazy thing is, no one functionally blames the government. Like this is a direct correlation to government malfeasance.
Look, this is a direct correlation to the government, but like, in any other situation, if we didn't live in such a globalized world, it would just collapse, right?
Totally.
But you know what's been funding all this is the IMF. They keep giving out loans to the Argentinian government. They say, fix this, fix that. They don't really care about the underlying problems of inflation. They say, oh, you're spending too much. Your government's spending too much. Ease back a little bit. We'll give you another $40 billion. And this is crazy. What I really foresee happening eventually is like, the IMF has like a pretty big checkbook, but you're going to see all sorts of countries going, through hyperinflation. I think right now, the number of countries that have over 30 or 40% inflation is maybe like 10 or 15.
Dude, and that's just stated inflation. Like Canada's well above 30% in functional inflation. We're stated at 8, which is ridiculous.
Exactly. And then also like, what is everyone's like smart? What is every like government smart remedy to this? Germany, we're going to give $200 billion printed out of thin air. I don't know how they even do that in the European Union because they can't just print money. I don't quite know how that works. 200 billion to the energy companies. Japan, we're going to do QE, yet we have to sell US dollars to buy back Japanese yen. But also we're now going to give a $200 billion stimulus to the economy as well. All these governments have the exact same solution. Print more to fix the printing problem. It's like,
I had a buddy stuck in this mental gymnastics of the Japanese yen. He's like, look, like US is just going to do the same thing as Japan. They're going to inflate, and then print a bunch of money and buy all the debt. And I was like, what? How does that draw that out on a piece of paper for me, right? Do it with rocks. Show me how that works with rocks and like pebbles of sand. Like how can somebody print their own currency to then buy the debt in their, like that's a circular reference. And he tried to explain it for like 30 minutes until finally it clicked that like value cannot be created out of thin air. Money can, when it's detached from value. And that's what our current dollar is. It's money that is detached from value. Bitcoin, on the other hand, is money that is directly correlated to the value of proof of work, to the proof that you have put value into that currency, into that money. We have proof of stake money already. We already have a dollar that sucks. We already have a dollar who's controlled by the individuals that want to control it. We need that proof of value money. That's what we should be calling Bitcoin, proof of value. Have you put your time, have you put your effort into that money? It's like salt. Our value is like salt. And it like protects, like when you put salt on meat, it like preserves it and keeps it nice and like fresh and you can eat it. It gives it longevity. When we put work into money, we give it that value and that longevity. And like it's just, I know I've been doing this for almost a decade and like I'm pretty far down the rabbit hole. It is crazy. Back to education. It is crazy that we don't have this level of logic being pumped into kids.
Yeah,
So
it's like all things. Like if you start young, the concepts, you grow with the concepts a lot easier, right? Like all of us right now, the people who don't or believe Bitcoin's a Ponzi, they are fighting against 30, 10, 20, 30 years of indoctrination of like the system is working fine.
Is that you or me?
Wealth inequality, but it's the corporations' problems. You have to undo all this like mental arithmetic that you've built up over the years to really understand Bitcoin, or you have to come at it with an open mind. And I guess the reality is like minds are just getting tighter and tighter and closer because that's really the only way that we can defend some of our like our ideologies for things. People are becoming more close-minded than ever, which is really sad considering we have like the best tool to feed an open mind ever, which is the internet, right?
Well, and isn't that what was that law you pulled up? Gall's law or whatever?
Gall's law, yeah. Simple, like complex systems that work are built off of simple systems. You cannot build a complex system out the gate and expect it to work, right?
Exactly.
So, yeah.
Exactly.
All right. I had one more here. Fed funds rate. Macro stuff. I guess I'll tie it into the next part, but yeah, so we had a couple earnings, Apple, Microsoft, all that, just softening across the board. Demand for cloud services are not as high as they were. That's probably tech companies scaling back, pulling back. Ad revenue, Google, YouTube, Facebook declining a little bit. Just a lot of cyclicality, right? And it's very evident these companies, all 5 or 6 of them or 7 of them, they make up 25% of indexes, probably a whole ton of jobs in the US. And so their earnings matter. And I think that's why you're seeing now the expectations for rate raises. I think it's still going to be 75 basis points, but you're seeing prediction probabilities ramp up for maybe the Fed calms down a little bit, which I find is interesting.
Hard to say, man. I mean, look at Canada. Canada is like,
well, I missed that today. I mean, yeah, exactly. We had a 50 basis point raise. It was a surprise. Everyone thought 75.
Is that the 7th one this year? How many have they done this year? 7?
I don't know. Too many.
Let's look it up because let's talk facts here. Like, so the states have done 1. Is that correct, or have they skipped the 1?
How many, like number of raises, or what their current rate is?
Number of raises.
I think there's been about 6 or 7. I think we've done the same amount of raises. I just know that we did 1 BPS when they did 75. And now we've done 150. So we're like a couple weeks ahead of them at all times.
Right.
Yeah.
Yeah. So in Canada, it's 3.75% right now.
Yeah.
Oh, I want to know. I think they've done 7 this year.
Probably, yeah. I mean, they've done as many as they possibly can. Like I don't know what the FOMC thing, and I never understand these bureaucratic things. It's like why do they have an FOMC? They skip certain months to do the rate announcements, but then will do like 3 months in a row, and then they'll skip August or whatever, and then they'll do one in September, and then they'll skip October and do November and December. Like, who comes up with this stuff?
Crazy, man. So they're projecting still another 1% next year, and then 2% in 2024.
Yeah, I think the consensus is like we're probably going to get close to around 5%. The really crazy things that start happening is I learned about this the other day. There is kind of like a triggering point for variable rate mortgages where if interest rates go above a certain amount, you're forced to refinance at a different rate, because usually variable rates are like they're locked in for like a certain term or something, some smaller amount. But if interest rates go above a certain level, you're forced to do like almost a complete refinancing. And I think the trigger rate for a lot of them is like 5 or 5.5%. And I know now in the US, a 30-year rate fixed mortgage is like 7%, which is pretty crazy.
Holy crap, man.
Yeah.
That's insane. And I think I heard something to the effect of lifetime mortgages coming into play here, which is crazy. Like 100-year mortgages, give your mortgage to your kids. Type of mortgages, which is just insane, man.
I mean, I'm gonna just predict, because I do think this becomes a bigger problem in Canada at some point. We had 35-year mortgages in Canada, and I think after the financial crisis, they took them down to 25 amortization periods.
Right.
You could do financing for 35 years, and then they moved it down to 25 or 30 or something. They're probably going to jack them back up again. I mean, everything is like pay. You know what was crazy to me, honestly, is like I got an email from the Bitcoin magazine people about, tickets to their event, and they're like, well, you can now pay in monthly installments. I'm
I
like,
know,
isn't that kind of weird? Like
dude.
the biggest Bitcoin conference is like literally teaching you about, low time preference in every issuance, yet they have the most high time preference thing that they're
Payment
emailing you about how
options.
to go to their event.
Dude, it's so true though, man. It's like everything. I was buying something on Amazon the other day, and it was like right in there, like
Yep.
$34 a month for 4 months, or you can pay
Yeah.
100. And I was like, what? Like,
Yeah.
it's crazy. It's crazy. It's absolutely ludicrous.
Yeah, it's nuts. All right, we're going a little bit over time here, but I hope people are enjoying the show. Let's talk about tech earnings. So this is a little bit of a part of it. Let's start with Meta first, and I'll go over some stats here, and then we can kind of talk maybe some of our thoughts on all this. Apologies for the whole screen thing here. I can't seem to like zoom. Maybe I can zoom in like this. Well, look at that, magical.
Nice.
So earnings per share lower than expected for Meta. Revenue a little bit more or less in line. Daily active users about the same. Everyone's on Facebook, Instagram every day. Monthly active users a little bit better than expected. Average revenue per user all right. The big takeaway is that they are just burning through money. And the weakness that they've had over the last few quarters is kind of stuck, where they're losing, time spent on the platform to platforms like TikTok. They're always trying to copy other features. They're having a hard time monetizing some of these Reels things. They're working on creating a YouTube-like model at Facebook, where users who create content can have their content monetized and they can make some money off it. But ultimately, fewer and fewer people, or not fewer and fewer people, but people are just spending less time. So people aren't leaving these platforms, but they're spending less time on them. And that's a big deal for ad revenue and ad sales and all that as well. I know there was a shareholder, Brad Gerstner of Altimeter Capital, and his big thing that he's been recommending to the company is you got to reduce headcount. And this is what we talked about earlier. Like all these companies have super bloated headcounts. They have all these like amenities in the office, and nobody knows what half these workers are doing. I heard that Google hired something like 36,000 people in the last 6 months or something, and people don't even know what they're doing, right? Like what could 36,000 people possibly be doing at Google right now in the last 6 months? I don't know. But like some of the big takeaways from this are free cash flow, way below consensus. It was $173 million versus 2.8 billion expected. And so far, I think in the last 2 or 3 years, they have spent $31 billion on the metaverse, and VR.
Here's the thing.
And
The metaverse is not a business. The metaverse is a protocol. And you just don't make money on protocols. Like we've tried this. It is such a high time preference problem, such a high time preference look to think that the metaverse can be monetized. It is actually, I think we will look back in like 5, 10, probably not that, like maybe 20, 25, 30 years, and think it's mind blowing how big Facebook got without producing their own media, without like by building just a platform. They're an aggregator, right? They're just an aggregator to eyeballs and people that want to buy eyeballs. And it actually is, it's quite impressive to see what they've done. But that works better as a protocol, which Jack, I think, realized, and Jack has gone on to now at least have a hand in starting and build it. The metaverse is a protocol and has to be treated as such. It is not a profitable venture. It is not a profitable place to be because it's decentralized, because it is, it works better. It's a slower, a higher, or a lower time preference, a slower build into a better product when it's a protocol. And Zuck's time preference is just like through the roof. It's just too high. And he's got to figure that out. I mean, hey, listen to me. Like, I'm whatever. But that's my opinion.
Yeah. No, we're just pundits. But, I totally agree with you. I think one of the things that kind of is weird to me is like I think he had a pretty good time preference in figuring out how to build Facebook from scratch, right? Like he obviously had a lot of foresight and figured
Not
out,
really, man.
no,
Like Sharon, like the COO that just left,
I know that she
built
fed him a lot of stuff, right?
no, she built that business, man.
Yeah,
She built that business. He is a remarkable engineer, a great visionary. But like if Sharon's not there, there's no Facebook today.
yeah,
And he needs a Sharon for the metaverse. Like maybe someone smarter than me will figure it out. Maybe someone smarter than me figures out that it actually is better as a protocol.
hmm,
Or they can trick enough people into believing like that it is better as a business than a protocol. But in my opinion, with my philosophy and my time preference where it's laid, it's better as a protocol, like the metaverse. I mean,
yeah.
not as a business.
Well, one of the things I covered on the show a couple of weeks ago is I think a lot of the ad spend, there's their Oculuses or whatever are loss leaders. I don't think they make any money or
No,
profit off that stuff. They take a cut from the ad store and they have a ridiculous take rate. It's something like 40% of all the sales they take, which is just insane. It's like, Apple, everyone gets mad at for taking like 30%, but Facebook's doing 40. But what was I gonna say? Yeah, the big problem is they're not learning from the lessons of Facebook. Why do I spend a lot of time on Facebook? And I think about it these days, just myself. Like when every now and then I'll have a day where I spend an hour plus on Facebook. And why is that? It's usually because I get in an argument with someone, right? Or I am having a lively conversation about something, right? It's like the time, and that equates to how many ads I end up seeing, have to do with my engagement with other people on the platform or some form of passive content. Maybe there's just like a good lot of videos. In my opinion, their video algorithm is still crap compared to YouTube or TikTok and stuff like that. They don't really recommend great stuff. But all that being said, essentially, they're not applying any of that into their creation of the metaverse. They are building these really out there tools, like, and I've used some of them, Horizon Worlds and stuff, so that you can build your own little games and things within their own Facebook VR world. But there's no incentive to play any of those things because they haven't really appreciated or built up the networks effects of it. You could
right.
spend hours building, great tools and 3D models and all their tools, and you could publish something in Horizon Worlds or whatever, but 20 people are playing it at a given time, or 30
Yeah,
people are playing it. So there's no incentive to go there yet. And the question is, well, how do you get people into that, right? I think there has to be a killer app. And
totally.
I don't know what that is. I don't know if VR will ever have it. I'm still of the belief that as long as we have physical chunky headsets on our head that strain our eyes after an hour, we're never going to have, the metaverse that he thinks we're going to have. I'm of
Yes
the
and
firm
no.
belief
I
that
mean,
it has
humans
to be
will
like,
evolve.
yeah,
Like, you got to think. You could. My grandmother can't believe that I'm on a computer 14 hours a day. Like, you know what I mean? I think that we will evolve, and it's what you're used to. Like, the only reason our neck is strained is because our neck muscles aren't used to that kind of movement. I tend to agree with you, but I do think
I
of the
don't know.
physical
Well,
limitations.
let's think of it from a hardware perspective. It's not just like the neck strain and the weight of the headset. It's just like, I go in there, I'm sweating, but like everyone says this, no matter how good the VR system, you just get nauseous after an
Yeah,
hour. Like most
yeah,
people just get nauseous after an hour. It's weird. You just don't have the exact same field of vision and
yeah.
the width and all that. And it's just not going to feel natural until they completely they make epic hardware. And this is my thing against that new headset they have. It's 1,500 US. They want people to use it for work, but like it's maybe like 30% better pixel density. That was my biggest problem with the Oculus Quest 2, is like
Mm,
it looks chunky inside, right? Like it just looks a little bit soft, but like you're going to charge 8 times the amount for like a 30% incremental improvement on the pixel density. I think that's crazy. And the thing that's crazy is they actually have better pixel density technologies out there for VR. I think Facebook was just not willing to go up to like $2,000 a headset to make it happen.
right.
But I mean, I don't know. I have to use this thing before I chirp it. But I mean, they've spent a lot of money doing this pro headset. You can tell that they're gonna make a marketing effort and a half to push this into work environments. I saw like photos from behind the scenes at Meta, and like everyone's like doing work with their headsets on. It's just like, I don't know. Stop trying to make it happen. What's that like thing from Mean Girls? Stop trying to make fetch happen. It's not gonna
Trying to
happen.
make fetch happen.
Yeah.
Yeah, man. I got a meeting I got to jump into, so I got to bolt.
Oh, no worries. Cool, cool. Well, we'll wrap it up. But yeah, I guess closing thoughts maybe on this. What do you think would get you to put on a headset for 2 hours a day?
I think multitasking, like 100% of the phone calls that I take that are audio only, I go on a walk for. I prefer to move when I'm there. So if I could take my, I don't know, my 3 monitors with me and walk and not get run over and whatever, then maybe that. But at the same time, it's like I think the HoloLens is the best. Like the best version of the metaverse that I foresee is actually AR rather than VR. Like that heads up display on a dashboard, show me my stuff on the bottom and let me see the real world through a windshield. I think that's better and stronger than wearing a headset all day.
Yeah. My thing's always been like, I think it has to get to a point where it's like Neuralink, like you can tap in and then you have your own visual interface, but you're not wearing or doing anything, right?
Right.
But yeah, like there has to be a level of pass through, you know, exactly for us to kind of like maintain our day to day and interact with it. I 100% agree. HoloLens for me is even too much. I don't wear glasses, so you know I couldn't imagine
you know
wearing
what
a thing
though?
like that. But
I do like. I think glasses could be sharp. I think
I think it could.
glasses.
What happened to Google Glass? That was like going to be a big thing, and then it kind of
With the like the gray piece on the left eye.
it was too early, I think.
Yeah, Facebook actually did one with Ray-Ban. I have a couple pairs. They're pretty
Oh
good.
yeah.
Like I wear them when we go on bike rides, and stuff with my kids. They have like little speakers in the ear thing, and then you click a button and it takes a 30-second video. So it's like it's nice for like point of view action shots. It's pretty cool.
Cool. All right. Well, we'll wrap it up. I had a little bit more, but this is my first time trying this format. I hope you guys enjoyed this, a little side-by-side conversation. We'll probably try this again. Yeah, Adam, thanks so much for coming on. Where can people find you, find out what you do and more about Bitcoin Well?
Yeah, at Adam O'Brien _ on Twitter. No blue check. So don't get fooled by I'm not sure who would pretending to be with the blue check, and then check out our company, bitcoinwell.com. We're a Bitcoin only company that makes it easy to buy, sell, and use Bitcoin in a non-custodial environment. That's our core mission, make it easy to use Bitcoin. And so I'd love some feedback, love to check it out. We're actually launching a new portal like probably next week. So pretty busy, pretty excited on the go here, getting the new portal out, and would love some feedback there. And yeah, check us out. DM me on Twitter. Let's connect and let's chat.
And if you're watching my channel, you'll probably see some more of Adam soon. There's also a great interview we did. I just posted a couple days ago or a day ago that we did. That's great kind of overview of what you guys are doing in there and your whole journey. And who knows what other adventures we might be up to soon.
Yeah, man, should be fun.
Cool. Take care, guys. See you next week.
Peace.
Peace.